Lisa, thanks for joining us today. We're going to be discussing the first-time home buyer tax credit that we've all been hearing a lot of lately. I've been seeing it on the news and the newspapers. I understand this is going to be going away real soon here. I've heard dates as early as the end of next month, the end of April. And I wanted to give our listeners an opportunity to talk to an expert on the tax rules and regulations in our area, that being yourself, of course, Lisa, and to answer any questions that you think are important for today's first-time home buyers to know before getting out in the car and taking a look at properties here. So, welcome.
Well, thanks for having me.
The first question I have for you is just a basic understanding of the program. Who qualifies as a first-time home buyer under this new plan?
First-time home buyer rules are basically the same as they have been. You have to have not owned a principal residence in the past 3 years before you purchase a new home.
Okay. Okay, cool. And has that been broadened somewhat? I was reading something that kind of led me to believe that maybe people outside of the first-time home buyer umbrella would also be included in these new changes.
Right. One of the biggest changes was adding the fact that current homeowners who've lived in their home, who've owned homes 5 consecutive years out of the past 8 years can now also qualify for a credit. It's slightly lower. It's $6,500 versus the $8,000 for the first-time home buyer, but it's still an amazing opportunity.
Okay. Well, that seems relevant to a lot of the folks that I've been meeting with lately who purchased properties, from 2005 or 2004, 2005, 2006 onward up to about last year, and are looking to turn around and sell it now. And in order for them to take advantage of the program, that might be something now with this new change that allows them to do that. Is that right?
Exactly. Unfortunately, we're starting to run out of time. As you mentioned, you basically have to have a contract in place by April 30th, 2010 to qualify for the credits.
Okay.
And then you're required to close on that property before July 1st, 2010.
Okay. On another note, I know that a lot of first-time home buyers are seeing a lot of distressed properties out there, and short sales there are many short sales in the market right now, and typically those transactions do take about 3 to 4 months to close. So something like that might be a little more tricky to close and still take advantage of the credit. Although there are some things in the works here that go into effect the 5th of April that may hopefully streamline some of that activity, but the short sale may be a challenging type of purchase for today's first-time home buyer to purchase and still take advantage of this credit as of right now.
Definitely. I've been hearing the same thing you have and experiencing the same thing you have, that as far as short sales go, sometimes it can take quite a lot of time. We're talking a couple of months. So if a buyer is interested in that type of property, they just have to keep in mind that they may or may not make this first-time home buyer credit window.
Right. So talk to me a little bit more about the income limits. I know that those were also kind of extended. They were a bit limited in the first version of the tax credit, and now I guess in November when they made the changes to the current plan, that was broadened somewhat. Can you talk to us a little bit more about that?
Sure. Under the old plan that went through November of 2009, if you were single and your income exceeded $75,000, or if you were married and your income exceeded $150,000, you were subject to the credit phasing out, meaning as you got higher in income, that credit would be reduced till it got to zero. The good news is purchases after November are now subject to the new income limits, which is if you're single, you can make up to $125,000 before any reductions of the credit take place. And if you're married, you can make up to $225,000.
So if you are a first-time home buyer, or not even a first-time home buyer, let's say if you've owned property that you used as your primary residence for at least 3 of the past 5 years, and you would qualify for the lesser of the credit, you make less than 225 as a single person?
225 married and 125 as a single person.
Okay, cool. And then it starts phasing out above that, or is that the point where you don't get a credit?
That's the part that it starts phasing out. I believe you have up to another additional $20,000 of income. So as long as you're single and below $145,000, you would at least get some of the credit.
Okay. I mean, that's a pretty big cap, so I imagine that would allow a lot of people to take advantage of that benefit. That's awesome.
Basically, in February, Congress signed the American Recovery and Reinvestment Act, which established a tax credit for qualified first-time home buyers who purchased a home between January 1st, 2009 and December 1st, 2009. And the tax credit is equal to the lower of 10% of the home's purchase price or $8,000. But obviously in the D.C. market, most people are going to get to take advantage of the full $8,000.
Right. Okay, that sounds awesome. And that's different, as I understand, than the version that was in the previous year. There was some sort of tax credit designed to help first-time home buyers in 2008, as I recall, but that was quite a bit different, right?
Right. It's very different because the 2009 tax credit doesn't have to be repaid, but the one in 2008, which was for eligible home purchases between April 8th, 2008 and up to January 1st, 2009, for those you got a $7,500 tax credit, but the difference is that $7,500 has to be paid back starting in 2010. So it's essentially, what it turns out to be is basically a 15-year interest-free loan.
Are there any restrictions after they buy that they need to be aware of in terms of selling it at a certain time after they purchase?
Yes, if you purchase in 2009, you need to live in the home for at least 3 years.
Okay.
Otherwise you have to pay back a portion of the credit. Now, same thing with the one in 2008. If you sell the home before the 15-year repayment period, you'll have to repay the remaining balance in the tax year that you settle.
Okay.
We're starting to run out of time. As you mentioned, you basically have to have a contract in place by April 30th, 2010 to qualify for the credits.
Okay.
And then you're required to close on that property before July 1st, 2010.
I appreciate your time today. Before I let you go, do you want to explain to our listeners some other financial services that you provide? I know you're certainly great at taxes. I can speak to that firsthand. But some of the other services that you want to tell us about?
Basically, I provide accounting services to individuals working on their personal income tax returns, small businesses, and I also work with nonprofits doing some tax and consulting work for them.
Awesome. Well, Lisa, I'll go ahead and let you go. I know that you're busy. I appreciate your time and you explaining to all of us the ins and outs of this credit. I, for one, learned something today, so I hope everyone else has, and I appreciate your time.
Thanks. I appreciate being on the show.
All right, Lisa, take care.
Okay, bye.
Bye.